My personal view is this war and this supply deficiency is substantially deeper and much more serious than you're really taking into account. In every storm, in every situation, chaotic, scary, unknown, unpredictable, there are those who do really well. Well, today, everybody who's involved in the financial markets to any degree of experience and expertise have an opinion about what's taking place in terms of oil and gas, energy, cost of debt, and of course their commentary, how it relates to the entire globe financially. Look, I think that everyone has opinions about what's going to take place when it comes to crude oil, natural gas, liquefied natural gas. The longer this Iranian war stays active, the longer the way the Straits of Hormuz stays closed. And so the real question is not what the price of oil is. It's not really about whether it's $100 a barrel or $85 a barrel. It's now what kind of residual effect is taking place across all the global economies related to supply, demand, and of course the residual downstream supply deficiencies as a result of limitations in raw mixed material like crude oil from the Middle East. Now, in my view, I think this is quite simple, all right? The world does not have an abundant amount of storage. No one goes and puts 3 months, 6 months, a year's worth of their internal consumable quantity of oil in storage. We here in the United States, we have the Strategic Petroleum Reserves. We should be up to 700-800 million barrels. We're down below 400 million barrels because we've been tapping it and using it in the previous administration as a financial tool to keep inflation in check and to allow maybe the idea that the consumers had a cheaper form of gasoline, electricity, and fossil fuel products. That's a mistake. The current president said, hey, we're going to release another 170 million barrels out of the Strategic Petroleum Reserves, the SPR. He now says, hey, bring all your ships to America. Come get all of our oil. We're an oil productive country. Where's that oil coming from? We don't have an extra 170 million barrels laying around. We pretty much are consuming about 21 million barrels a day, and yet we only produce 13.6 million barrels a day. Oh, I know, we have condensate, we have natural gas liquids, we have different byproducts. We're exporting 4.5 million barrels a day. Folks, we're a net importer. So the topic today is really for you to consider yourself. You're going to have to look at all the facts if you want to. You're going to have to listen to all the experts you think actually know what they're talking about, which most do not. And you're going to have to decide where you are, where we are as an investor, as an oil and gas asset owner, as an entrepreneur, as a business owner, where we're at in terms of the downstream effect of this war and the limited and the restrictive supply of enough oil to be supplied to all the countries and all the people and all the end users that need that oil for everything from fertilizer to gasoline in your car. My personal view is this war and this supply deficiency is substantially deeper and much more serious than you're really taking into account. I hear all these different people get on Fox News and all these different news channels and media outlets, and they're all saying the same thing. Don't worry. The strait's going to be opened up. Oil prices are going to crash. Everything's going to be back to normal. Go buy stock. You need to watch the movie The Big Short about 4 times. See, you're the sheep. You're the test monkey in the cage. And everyone that's sitting back here that's giving you the advice, they need you to stay in the stock market. They need you to stay calm. Otherwise, it crashes the stock market. It kills these data centers. It kills stock values. It kills prices. It makes banks go into retreat. Debt and capital dry up. The economy goes into a recession. So they're saying, look, just keep espousing the same nonsense, non-factual data about this is not a really deep problem. It's just a short-term problem. And we have plenty of oil to fill the gamut. Let me tell you something, folks. When the Russian war started and oil went to $129 a barrel, it was over $95 to $100 a barrel for almost 24 months. Not one thing was done about the Russian war. Why? It was a certain amount of oil. They changed end users, end suppliers. They went to LNG instead of crude oil, and they had the ability to maneuver from a logistical standpoint to get around those end users that were going to have to rely on Russian crude oil and Russian gas as part of the tariffs and the sanctions against Russia for starting the war. Well, if they had all this extra supply and extra alternative assets, why aren't we turning to that right now? Because that was mostly gas coming from Russia into Europe, and it did have some crude oil, but it's mostly gas. Today it's crude oil. And crude oil has so many byproducts downstream, you can't even really measure it. It's just everything you touch is made from a barrel of oil. Every transportation, plastic, synthetic, asphalt, the camera I'm staring into, the clothes I have on, it's all made as a byproduct of refined oil and gas, primarily oil. So this situation is very, very serious. Because why? Because the fertilizers that need to be made from the byproducts of oil and natural gas are not able to be refined and made because there's a shortage. The haves and the have-nots are competing for tankers that are limited and undersupplied by 10 to 20 million barrels a day. Richer countries are paying more for the oil. The smaller countries don't have the financial bandwidth. They can't go buy oil at $95 to $120 a barrel. So they're telling their citizens, they're telling their constituents, they're saying, you're going to have to cut back. Drive 1 day a week, not 5 days a week. You can't run your air conditioner. You can't do this. You can't buy those plastic. We're going to raise the price so everybody stops buying and using things. They're pushing people into a recessionary pattern as a result of not having the raw mixed energy and material and the crude oil refined products to make their countries continue. You got countries like Japan who are down to like a week's worth of jet fuel left. They had 2 weeks left of supply of natural gas or oil. And what you're finding is that these countries did not think about a disruption for 45 to 60 days. This is day number 50. We're going on 2 full months. I do not believe the Straits of Hormuz will be open safely for probably another 3 to 6 months at the earliest. Those that I listen to that I believe are based on empirical data, not subjective nonsense, are putting out some pretty scary information. And what they're saying is that if this particular event of shutting down the Straits of Hormuz or the Houthis get involved on the other direction toward the Red Sea, you could be talking about global collapse in terms of recession, economies, and basically a food shortage. Now, why am I going through all this negative news with you? This is not like the positive show. This is like the optimist show. This is about me telling you this is serious business. Well, why do I do that? I don't do that to scare you. I do that so you'll get off complacency and take advantage of it. You know, my dad was a wholesale liquor salesman as a kid. I'm just a knucklehead. I like riding around with him. I'm 12, 13, 15 years old. I want to spend the day with my dad. So I go to the different liquor stores and talk to him all day, and we'd ride around, and it'd be a nice day for me to enjoy my dad's company, or vice versa. And I asked him one day, I said, hey, Dad, do you ever feel bad that you're selling wholesale liquor to stores and that people that are addicted to alcohol go into those stores and buy the alcohol? He said, no, I believe I have a job. I supply a product. They make a willing choice to use it or not. And if they don't have liquor stores with legal licenses and it's not done legally, they'll be buying moonshine in the alley right next to the liquor store the same way. Maybe it's an excuse, maybe it's a cop-out, but it made a lot of economic sense to me. I feel the same thing about oil and gas. See, there's no one I know of that's driving a smart car anymore. There's no one I know that's living in a small, tiny house except for those who just can't afford a house or they don't want to be in an apartment. In other words, we have grown as a result of very low priced energy prices and commodity prices. We've grown as a consumer, especially here in the United States, where it's okay to own a 3,500 pound Ford 250 truck. Hell, I own 3 of them. It's okay to drive a big car and a SUV and own 2 or 3. It's okay to have a 3, 4, 5,000 square foot house sitting on 1/5 of an acre in a tract home neighborhood. Why? Well, you've got 15-foot ceilings. You're running the air conditioner all day. What I'm saying is we've been conditioned by low oil prices, which everybody wants, to use more of it. You're rewarding careless consumption by having lower energy prices. So maybe higher energy prices does what? It causes people to change their habits. Well, is that detrimental to the oil and gas industry? No. We already have more consumption in this country than we have supply. Maybe what it does, it takes those that are supplying to stop supplying as much because the consumer buys less, and yet the price will rise. Why will it rise? Supply and demand. If I supply less, the price goes up if demand stays equal or same. If demand destruction comes down a little bit, as long as I'm not oversupplying against that demand destruction, I still have the fundamentally same economic output. This is a very, very major cataclysmic, potentially, event. You're talking about countries who basically use 60+% of their revenue from oil and gas sales to run their countries. Civil unrest, Middle East, Saudi, all these different countries that rely on the sale of oil and gas and rely on a certain amount of sale of oil and gas at a certain price to run their countries. What you're going to see is you're going to see a long-term effect. Now let's talk about the positive side. For those of us that were smart enough, responsible enough, disciplined enough to continue to buy and add to our assets in our portfolio, here at Eckard or wherever else you bought oil and gas, if you acquired anything prior to, let's say, March the 1st when the Iranian war started, your financial model should have been based on $55 to $60 oil. That was in our model. Natural gas was $275 to $350 per thousand cubic feet. Supply, demand, pretty much basically equal. We're burning 101 million barrels a day. We're making 101 million barrels a day. But no one went ahead and said, let's go put some storage tanks in. Let's go build some bigger SPRs. Let's go add 6 months worth of storage. No one's done that. But I can assure you one thing, they're going to. They're either going to find another alternative energy in case this ever happens again, or they're going to go build huge storage facilities that can hold maybe as much as 90 days, 180 days, maybe a full year's worth of consumable oil and natural gas and LNG in their countries, so it's never an issue again. What's that going to do? That's going to increase demand for oil and gas. It's going to increase it to satisfy their current consumption, but they're also going to have an increase in demand to fill the storage and the backup and the emergency reserves, which, by the way, almost 670 million barrels from G7 in the United States have been flushed into the market. That was about 21 days worth of equal. We lost 20 million barrels a day because of the Straits of Hormuz. They added 670 million barrels. About 21 days into it, those barrels were gone. We're on day 50. I just want to point out that in every storm, in every situation, chaotic, scary, unknown, unpredictable, there are those who do really, really well. And those who do really well, they look at the facts. They study the empirical data. They look at the propensity of all the data in front of them. They come up with a conclusion that makes the most sense. And the most sense is what? We have bought some great assets at really low prices compared to the financial benefit of today. All 12,000 wells we have are being sold at premium prices, both oil, gas, LNG, and liquids. We're sitting with wells that are produced. We added 509 wells last year. I don't know what we're going to add this year, but it's going to be a lot. We have a lot of our minerals and acreage being developed today. We're bringing on all of our Eckard energy wells on at the right time. $93 oil about 10 minutes ago when I looked at it, right? $2.75 to $4 natural gas. Way, way higher than our financial model called for. So it's a serious, serious cataclysmic event going on. I think one guy this morning I listened to, I kind of leaned in his direction. He said, look, if this thing lasts, as far as the Straits of Hormuz being restricted in any capacity through the end of May, this may be a once-in-a-lifetime economic event to the downside. It will cause months, if not years, to recover from what's taking place, what the Iranians are doing by shutting down the Straits of Hormuz. Now again, every time there's chaos, every time there's a storm, somebody's selling tornado shelters, somebody's selling umbrellas, somebody's selling shovels, somebody's making a lot of money even in times of chaos. Well, I got news for you. A lot of these farmers and ranchers that own those minerals that were saying they're never sellers, they're going to sell some of their minerals to pay down the bank debt, to pay off loans, to eat, survive. A lot of these folks who went out and have portfolios in real estate, et cetera, if inflation kicks in, which it already has and continues to kick in because energy is going to drive it higher, they're going to get banknotes called. They're going to have lines of credit canceled. They're going to have credit facilities that are cut in half or completely withdrawn. There's going to be a need for liquidity in the mineral ownership market just like everybody else. That's how we started back in 2018. We bought minerals from those who said, I'm a never seller except today. I'm a never seller of my leasehold except today. And we don't want to be looking for people that are down to their luck. We want to be there to help them with a solution they need, which is to buy their minerals, their assets today when no one else will at a price that fits our buy box, because we know that the liquidity and the demand for liquid assets by selling off some of their minerals and working interest and leasehold is going to allow us to buy great assets at a very low price compared to the market. It's going to make us, we have willing sellers who must sell. Like the IRS says, we're here to help you. Hey, I'm Troy Eckard. I hope you understand where I'm coming from. I'm no different than anybody else. I have an opinion. My opinion is pretty strong. I feel very founded in what I'm saying. Today we're at $93 a barrel. If oil prices, the Straits of Hormuz does not open up in the next 10 days, you could close the month out at $110 a barrel, because right now traders are scrambling for barrels that don't exist. We're at 93 today. Let's see what happens by the time we get to April the 30th.